Melissa, the Netflix story is interesting, but it's one that's not a secret. This is a stock that's already up 9% this year and 75% over the past 12 months. So how much can we glean from Netflix vis-a-vis the rest of the big tech and media companies to report?
Morning, Dom. It's great to be here. I think the big thing with the Netflix earnings is around the margins. Revenues came in line with Visible Alpha consensus. There was no big surprise there for Q1 or for the guidance they gave for Q2, but the margins were significantly higher for both. Margins came in at over 31%. For Q1, they were expected to be 28.5%. Similarly, for Q2 guidance, they came in around 33%. They were expected to be closer to 30%. So you're talking about 300 basis points of margin expansion that exceeded, or 300 basis points that exceeded expectations. This is quite noteworthy. I think going into the second half, the company did note that expenses are kind of heavier in the second half, and that we may see that margin expansion calm down. But I think in terms of the full year guidance that they gave for their margins around 29%, that could be a bit conservative.
Okay, so also one of the things that stood out was this notion that their focus is going to be a little bit more, I guess, in tune with certain growth aspects of their market. What exactly did you hear commentary-wise that resonated with you with regard to what they think is going to be the business plan going forward?
The trends are very stable for them, and the ad-supported businesses gaining momentum. So I think, you're seeing this dynamic in their business model that is changing. Based on Visible Alpha consensus looking out to 2030, the market is expecting $11.9 billion in revenue from the ad-supported business. That's very significant growth from where it is today. So it tells me that they are looking at other ways of monetizing their content as well as driving engagement.